Is the housing market heading for a global housing crisis? The American housing market is booming. The norm is double-digit appreciation. Anxious bidders are compelled to pay more than the asking price, often by $100,000 or more, while ecstatic sellers are sorting through many offers. For longer than anyone anticipated, the real estate parties is going strong. According to the National Associations of Realtors, existing home prices increased 14.8% between May 2021 and May 2022, reaching $400,000 for the first time. Prices have risen by a staggering 45% since the coronavirus epidemic began in March 2020, according to NAR data. Now, that being said, let's examine the market's performance more closely and see whether the housing market is heading for a global crisis or not. Make sure to stay tuned until the end to find out. Hey guys, welcome back to another exhilarating video. As you all know, today in this video we'll be talking about the housing market and whether it is headed for a global crash or not. But before we head to our topic, make sure to subscribe to our channel, Economy Expert, for more such economic content. That said, let's take a closer look. From 2005 to 2007, the US housing market last appeared this frothy. Then, with terrible results, home values plummeted. The world economy saw its worst fall since the Great Depressions when the real estate bubble burst. The lead analyst at Housing Wire stated, "We don't have a bubble, we just have unsustainable home price increases." Buyers and homeowners are asking the same question once again now that the housing boom is in danger from rising mortgage rates and a possible recession. Is the property market so hot that it's going to crash? Is this a bubble? This is the one question Phil Shoemaker, president of organizations at mortgage lender Home Point Financial, says. He is asked repeatedly. If you observe the increase in housing prices, it seems bubble-like. However, if you examine the underlying principles, it's difficult to conclude that it is. Indeed, the current property market's foundations appears to be far more solid than they were 15 years ago. Borrowers are now more creditworthy than ever, yet the supply of available homes for sale is still at or near all-time lows. Property economists have been foreseeing the eventual cooling of the housing market as home values succumb to their own success for months. Mortgage rates have increased since August 2021, and home prices have increased far faster than salaries, making housing increasingly unaffordable. Home values continue to rise in spite of such potential price drags. Punta Gorda, Florida, is the highest metro area in the United States. According to the National Associations of Realtors, home prices increased by 34.4% from the first quarter of 2021 to the first quarter of 2022. Ogden, Utah, and Ocala, Florida have both experienced rapid appreciation in recent years. Homeowners, economists, financial institutions, and real estate agents are still suffering from the nightmare effects of the previous boom and crisis. With property prices having increased significantly over the past year, the most recent boom is not without its concerns. According to Florida Atlantic University housing economist Ken H. Johnson, prices are certainly increasing at a rate that may be concerning. Concerns regarding the stability of the housing market are acknowledged by Fannie Mae's senior economist Doug Duncan. Large increases in property prices have always been a formula for disaster. According to Duncan, our assessment is that property prices are approximately 15% higher than what the long-term fundamentals suggest. There's a justification for asking, is there a problem? In the meantime, a price plateau rather than a steep decline is more expected, according to Greg McBride, CFA Bankrate's top financial analyst. McBride asserts that although the current rate of home price growth is unsustainable in the long run, a major decline in prices is not imminent. Real estate prices can increase sharply at times, like right now, before declining significantly over time. Prices will likely plateau, which is the more likely scenario. However, some home analysts anticipate a slight drop in values because mortgage rates have practically quadrupled since August 2021. Home prices will drop by roughly 5% by the middle of 2023, according to Matthew Poynton, senior property economist at Capital Economics. The offender? Mortgage interest rates are above 6%. Poynton anticipates a slowdown in the property sector rather than a collapse. Poynton said that the presence of fixed-rate mortgages, stringent credit requirements, and a rather strong job market, according to Poynton, still rules out a price crash. Lawrence Yun, chief economist for the National Associations of Realtors, concurs that no crash is on the horizon. The disparity between supply and demand is simply too great for housing values to collapse. In late June, he stated, "I wouldn't be shocked if some markets do experience some slight price drops. Any decreases, according to Yoon, are most likely to be modest, which is good for the market given the heavy pressure on affordability." Phoenix was cited by Yoon as an area where price growth defied gravity and where a small corrections wouldn't have a significant negative impact on the economy. Could it decrease by 5%? Of course, Yoon replied. Would it be a problem even if prices in Phoenix drop by, say, 5%? Definitely not. Do you think the housing market will crash? Housing economists concur that no traumatic crash is imminent. Logan Motoshami, the lead analyst at Housing Wire, asserts that there is no bubble. All we have is unhealthily rising property prices. Duncan concurs that despite being unique, the sudden increase in home values isn't a sign of a bubble. It's challenging to uncover evidence that it will disintegrate, he claims. According to Yoon, housing price-to-income ratios have risen to dizzyingly heights last seen in 2006. Of course, things are even different now, he says. But we need to pay attention to the circumstance. Economists who specialize in housing give 5 strong arguments why a crash is not near. 1. The level of inventories is very low. According to the National Associations of Realtors, there were only 2.4 months worth of available properties in September, according to the NAR. This quantity decreased to a measured 2.0 month supply in February because there isn't much available. Purchasers are forced to drive up prices. Additionally, it suggests that a price crash in the short term is not just possible given the current state of supply and demand. 2. The pace of constructions is too slow to keep up with demand. After the previous recession, home builders drastically reduced their output and never fully recovered to pre-2007 levels. They can no longer purchase land or obtain regulatory clearance quickly enough to meet demand. Although they are building more than they can, it doesn't seem realistic that they would overbuild as they did 15 years ago. The primary causes of the price increase, according to McBride, are increased demand and a dearth of supply. Supply and demand can balance out again as builders put more houses on the market, more homeowners opt to sell, and potential purchasers are priced out of the market. It won't happen immediately. 3. Demographic trends are creating new buyers. Homes are in high demand across the board. Due to the development of working from home, many Americans who already owned homes during the pandemic decided they wanted larger homes. The millennial generation is enormous and at a perfect age for purchasing. Additionally, a young expanding demographic that is eager to acquire a property is Hispanic. 4. Lending standards remain strict. Flyer loans, in which borrowers were not required to provide proof of their income, were widespread in 2007. Irrespective of credit history or down payment amount, lenders give mortgages to the majority of people. These days, lenders have strict requirements for borrowers. The majority of individuals who are approved for a mortgage have excellent credit. According to the Federal Reserve Bank of New York, the average credit score for mortgage customers in the third and fourth quarters of 2021 was a record-breaking 786. According to McBride, if lending standards relax and we return to the wild west days of 2004 to 2006, then there is a totally different beast. We worry about a crash if we begin to see prices being pushed up by the false buying power or lax lending criteria. 5. Foreclosure activity is muted. Millions of foreclosures entered the property market in the years following the housing meltdown, driving down prices. It's not like that anymore. The majority of homeowners have ample equity in their properties because lenders didn't issue default notifications during the epidemic. The number of foreclosures fell to all-time lows in 2020. All of this points to the conclusions that property prices are indeed outpacing their ability to be afforded. But this boom shouldn't go buzz, should it? According to Ralph McLaughlin, senior economist at financial technology company House.com, I'm not concerned about a housing bubble. The housing market's overheating is not based on animal spirits, but rather on an unfortunate and fortuitous successions of market dynamics during the previous year, according to the fundamentals of low supply and rising home ownership demand. What are your views on the housing market? Will it crash according to you? Let us know in the comment section. And that's all for today. Thank you for watching. If you enjoyed it, please like, share, and subscribe to our channel Economy Expert for more such amazing content.